Good morning, ladies and gentlemen. It's been a great pleasure to have you all here. I'll begin the session on MSME funding opportunities and challenges by welcoming the Minister, the Honourable Minister, Mr. K.H. Muniappa, Minister of State for Micro, Small and Medium Enterprise, Government of India. Welcome, sir. Mr. H.P. Kumar, Chairman and Managing Director, National Small Industries Corporation Limited. Mr. R.K. Dubey, Chairman and Managing Director, Canara Bank. I would now like to request Dr. H.P. Kumar, Chairman and Managing Director, NSIC, to the dais. Dr. Kumar, besides being a qualified banker, is a management graduate and holds a PhD in rural industrialization. He has held senior positions of corporate head of finance and CEO of public sector corporations. Dr. Kumar has a long experience of dealing with promotion, development and financing of industries, exports and other small-scale and large-scale projects. Dr. Kumar's vision is to provide a common platform to youth from diverse economic backgrounds to become self-employed. Dr. Kumar, if I can request you, please.
Honorable Union Minister of MSME, Government of India, Shri K.H. Muniappa ji, Shri R.K. Dubey, CMD, Canara Bank, Mr. Naveen Munjal, Chairman CII, Delhi State Council and Managing Director, Hero Electric Vehicles Private Limited, Shri Deep Kapuria, Chairman CII, National MSME Council, Mr. J.P. Gadia, Convener CII, Delhi Panel on Banking and Finance, Mr. Singh and Mr. Sinha. Distinguished guests, ladies and gentlemen, good morning. It is indeed a great pleasure for me to be a part of this important conference. Mr. Kapuria has raised very valid issues, in fact. I think the issues can be deliberated the whole day because he has raised so many whys, why this, why that, why. And believe me, we have been finding answers to these whys for a long time. A lot of work has gone, a lot of work has been done, but the questions still remain because the issue of funding the micro, small and medium enterprises is so vital that the whole sector's progress depends on this particular issue. 20 years back when we used to talk about growth of this sector, the first major constraint that was coming in the growth was the funding. And today, after 20 years, we are talking of the similar issues. To some extent, I differ. Because you see the growth which has taken place in the MSME sector over the last decade, I would say, or even more. The policies which have been put in place by the Government of India for this sector. You are aware the status of this sector in the country's economy. I need not give you the figures. This sector is the largest employer after the agriculture in the country. This sector, in terms of the employment generation, is the, as between the large and the micro, small and medium, is the best placed sector to cater to the needs of this country's unemployment issues. It's not only our country, but even in other countries, developing countries also, everybody is realizing that this is the sector where they can really create employment opportunities, and they are seeking India's help. We are assisting almost 35 developing countries. Every day the delegation comes and wants to meet the Honorable Minister that let India, the Ministry of MSME and the NSIC help them in growing and developing the schemes and the programs which we have been able to do it successfully here. While the sector has grown, as we can see the growth rate is more than 12%, much above the GDP growth rate and much above the large industries growth rate. But the problem of funding, which is the key issue of today's discussions, funding in terms of borrowings, funding in terms of equity, funding in terms of private sources, all these issues still remain and we are still finding the answers. That is why I was a little provoked to start with these initial observations when I got these many questions, which are very relevant, of course. It is not that they are not relevant. We have to refine our answers. We have created so much of structures which are doing so well, but then there are certain refinements, like, for example, I would say, creating SME exchange was one of the long pending requirement and need of the MSME sector. With the guidance and leadership of the ministry and the Honorable Minister, SME exchange has been created. It has been set up. Now the government can do in terms of policy making that the SME exchange is set up. With regard to implementation and the rules and paperwork and the criteria for listing, this has to be decided between the stakeholders. Now there I find there is a lot of problems. It's almost more than a year that the BSE and NSE have started. Still hardly few companies, 13 or 14 companies have been listed. Our expectation was that this would open up tremendous opportunities for the small and medium enterprises to have the alternative sources of funding, which has not yet taken off. We have to find the answers and refine our solutions. The solution is not opening SME exchange, which has been done. But then what is preventing the SMEs from going to the listing? Why it is not happening? That is a question. And that question is very important, Mr. Kapuria. I am sure that this is going to be discussed today. I have certain answers which we really deliberate. Well, another issue is bank borrowings. What is the problem in meeting the requirement? Honorable Minister has been calling various meetings of the banks at various levels, even advising the Reserve Bank of India also almost every month. You mentioned about inclusive growth, Mr. Kapuria. Honorable Minister has been mainly concerned about the micro enterprises because they are the most sufferers. Small and medium are still able to manage some funding, but the micro, which is 94% in the country, is facing the hardest reality. And he has been telling that micro share should be increased. The Prime Minister's task force, the Honorable Prime Minister's task force, which was set up 3 years back, also said that 20% year-on-year growth for each bank has to be achieved. And this is being monitored by our ministry under the leadership of the Honorable Minister. 60% of that lending which goes to the MSME sector should go to the micro sector, 60%. And a time frame of 3 years, like first year 50%, another 55%, and then reaching to 60%. Now, why it is not happening? Why the shortfalls are being observed? That is the cause of concern. Let me analyze few small reasons, if you permit me. Do we lack the institutions? There is a tremendous network of banking institutions in the country. Every city, every corner of the colony has a bank. Every industrial estates have all major banks, nationalized banks, private sector banks. So institutional existence is there. Institutions are existing. The government could have given licenses, government could have created the network of banking sector. It has been done. Is the money not available? Is the funds not available with the banks? There used to be a time, I remember, almost 20, 25 years, 30 years, when I started my banking career in mid-70s, that banks were dependent on refinancing, mainly for lending to the, small sector, retail, transport operators, which are the marginal sector and micro sector in the MSMEs or the part of priority sector lending. And refinancing institutions were created like IDBI, SIDBI and other institutions. So naturally there was a constraints in terms of availability of resources, and looking at that, the refinancing mechanism was created. But today, is the resource a constraint? Absolutely not. You are all aware. There is huge funds, resources available with all the banks. Refinancing has not been an issue which has been raised over the last few years. So I mean to say the resources are available, the institutions are available, the takers are available, the customers, the beneficiaries are available. There is a huge market of beneficiaries which is waiting and which is asking for funding. Now another issue, the policies. The government has created such a favorable environment in terms of excellent policies. Some of them are very unique in India, which are very unique in terms of helping the MSME sector, like the norm of allocating priority sector itself is a very unique proposition. In most of the countries, this provision is not there and doesn't exist. The policy of assessment of credit, the various committees which have been set up over the last 20 years, Chore Committee, Nayak Committee and Mr. Kapoor Committee, another chairman of the Punjab National Bank, Tandon Committee. All these committees have suggested that there should be fast track consideration of the proposals of the micro, small and medium enterprises. There should be a time frame for sanction of these proposals. There should be specialized branches for dealing with these proposals of the MSME sector or the loans. Government has created another mechanism, that is Credit Guarantee Fund Trust. The Honorable Minister has given very clear directions to all concerned that Credit Guarantee Fund Trust should be made available to all the needy micro and small entrepreneurs, which is of course up to a limit of rupees 1 crore of credit. 1 crore is a substantially good amount of credit, and since 94% of the sector belongs to micro, so you can imagine up to 1 crore, and the requirement is up to 1 crore only. So you can imagine how much, percentage this 1 crore can really achieve in meeting the requirements of the credit. This Credit Guarantee Fund Trust is available to all the banks, all the member banks in the country without any problem. And this policy has been really a very landmark policy of the Ministry of MSME, Government of India, which is implemented. There are many other countries which have requested us to share this policy with them, so that they can also start this policy in their, because in many of the developing countries I have been traveling, this kind of scheme and this kind of unique mechanism doesn't exist. Of course, some advanced countries have, like Japan and Korea and Germany and Italy and US. Some countries have really. But the developing countries and underdeveloped countries, particularly developing countries like India. So policy framework has been created. Targets have been set by the Government of India. Security problem has been tackled, that collateral free loans will be given. So what do you need? Why this gap still exists as far as the credit flow is concerned from the banking sector to the beneficiaries, yes, Mr. Kapuria mentioned about the risk perception. I think that is one reason, but if I go back to analyzing the non-performing assets of MSME sector, I find, there should not be any reason even to suspect about the risk perception of the MSME sector, because the NPAs do not show like that. The percentage of NPA is still, not very comparably very high as regards the NPAs of the large sector or other sectors. There may be a marginal difference, of course, but it is not beyond control. So with all these structures created, funding not a problem, finance not a problem, collateralized, collateral-free credit being made available, the policy has been established by the government. Why there is a gap? My take is, and please forgive me if I am incorrect, particularly Mr. Dubey, my take is that still there is lack of awareness amongst the people who are on the ground in the branches. There is lack of training to them. While the managements at the highest level, if we talk about when we have had meetings in the chamber of the Honorable Minister with the chairman of the banks, and they are all sympathetic. They share the concern of the sector as well as the government. The top management, the higher echelons in the banking sector they are all for the sector, for the industry, for dispensation of credit. But at the local level, at the branches level, there is inadequate training, inadequate awareness. Many of the branches we have contacted, they do not even know Credit Guarantee Fund Trust. and they are unable to provide the benefit because they are not aware. Many of them, another unique scheme which has been implemented by our ministry and the Honorable Minister has again emphasized that this should be spread all over the country is the performance and credit rating scheme. Now, looking at the problems of the sector, many of the units were complaining that the risk perception is high, the banks are not able to directly provide them the assistance. We came out with performance and credit rating. Now, this is an independent assessment by a third party, an internationally accredited rating agency. Now, if you take the rating agencies like CRISIL, Dun & Bradstreet, ICRA, Fitch, CARE, all these are the rating agencies which are doing the rating of the country also. They are the internationally accredited and international subsidiaries as far as the rating is concerned. Now, if they give you a rating to a small industry in a 40,000 rupees, where you have to pay only 10,000 rupees and 30,000 rupees the ministry pays, 75%. Now, 8,000-10,000 rupees if you get an internationally accredited rating, what else? And the rating certifies your credit worthiness, the rating certifies your performance ability, the rating gives you an independent assessment. And even then, if the bank does not give recognition to that rating, naturally there is a problem. So I was trying to find out the answers to some of the issues raised by Mr. Kapuria, and I am sure that you are going to further deliberate on this, and I would suggest, in case the recommendations can be compiled, because I see very elite gathering and a lot of brainstorming is going to happen here, and CII of course leads in terms of these high level deliberations. So we will be very highly enriched, and I suggest that in case you can make your recommendations and send it to the Honorable Minister and a copy to me, I will request the Honorable Minister to look at those recommendations, some of them, and surely they will be considered. And wherever the action is required from the ministry level, we will request the Honorable Minister to call a meeting and initiate the action. So wish you all the very best for the whole day's deliberations, and thank you very much CII for inviting me here. Thanks.
Thank you very much.